Yes, bankruptcy is an alternative legal option that individuals with tax debt may consider in specific situations. However, it should be viewed as a last resort because bankruptcy has significant consequences and should not be taken lightly. Here are some key points to consider regarding bankruptcy and when it might be necessary in tax debt situations. Chapter 7 Bankruptcy, also known as liquidation bankruptcy, can potentially discharge certain types of tax debt if they meet specific criteria. To qualify for tax debt discharge in Chapter 7 Bankruptcy, the tax debt must meet the following conditions. The tax debt must be income tax debt, not other types of taxes like payroll or fraud penalties. The tax debt must be at least 3 years old, counting from the due date of the return, including extensions, and not from when it was assessed. You must have filed a tax return for the debt at least 2 years before filing for bankruptcy. The tax assessment must be at least 240 days old. You must not have engaged in tax evasion or fraudulent activity related to the debt. Note that even if you meet these criteria, certain tax debts, such as trust fund taxes, are generally not dischargeable in bankruptcy. Chapter 13 Bankruptcy is a repayment plan that allows you to reorganize your debts, including tax debt, into a manageable payment plan. While Chapter 13 does not typically discharge tax debt, it can provide a structured way to repay the IRS over a period of 3 to 5 years while potentially preventing further collection actions. Individuals should consider bankruptcy as a legal option for tax debt under the following circumstances. If you meet the criteria for discharging tax debt in Chapter 7 Bankruptcy, and it's your best option for resolving your tax debt. If you are facing the threat of asset seizure by the IRS, bankruptcy's automatic stay can temporarily halt collection actions and protect your assets. If you have a stable income and can commit to a structured repayment plan under Chapter 13 Bankruptcy, which allows you to manage your tax debt over time. When all other options, such as installment agreements, offers in compromise, and currently not collectible status, have been exhausted or are not viable. It's crucial to consult with a bankruptcy attorney and a tax professional before pursuing bankruptcy for tax debt. They can evaluate your specific financial situation, tax debt, and eligibility for bankruptcy relief and provide guidance on the best course of action. Additionally, keep in mind that bankruptcy has long-lasting financial and credit consequences, so it should only be considered when there are no viable alternatives for resolving your tax debt.